That's how the rich people operate. They borrow money or they save money, they get that money into liabilities. This money that they think is a liability, they use to get an asset, and that as you save 300,000, for example, something happens. That's why that doesn't happen in time. Something happens to the family member, falls in. But if you're utilizing debt, you have to be very, very good. If not, utilizing this one can kill you. Debt can kill, as you heard the name. This is to get an asset. Purpose of a liability is to get an asset. Purpose of a liability is to get an asset. Don't use a liability to buy another liability. Hi guys, today I'm going to talk about how the rich operates. And it's very important for you to know that if you do not know how the rich operate, then you can never ever become rich or wealthy, whichever way you want to see it. It's very important for you to understand it because we've been learning about it, all these things. And then it's not as if we are rich or we are wealthy yet, but this is just how they operate. And the truth of the matter you must know is that how the rich operate is simple, but it's hard. It's simple, but it's hard. It's a very hard thing to do. But it doesn't matter that once you see it, you cannot unsee it. And then you have to just keep practicing it and then practicing until you get it. And once you get it, life becomes easier from then on. Because as we know, to him who is rich, it's easier for him to become richer. And to him who doesn't have, to him who is poor, it's even difficult for him to be rich. And the least that he has, he's going to lose it. So now let's imagine that you're starting from zero. Everybody starts at zero, and you want to build a business. You want to build a business that is going to be a legacy after you. And then you're thinking about two things. Once you're starting from zero, you have only two options. Either you get a job, or you save money, or you find a way to get debt from families and friends to dive straight into business because you want to start a business. I'm not talking to those people who don't want to start a business. There are some people who don't want to start businesses. Some people just want to be employees, they want to work under somebody, and then so everybody has different pursuits in their life. So once you're starting from zero, well, imagine that everybody's starting from zero, and then you have two options to get a job so that you can save. Let me not even use to get a job, let me not mention jobs here, but you want to save or you want to use debt, because in business, one thing that you must start with is capital. You need capital to start whatever business that you're doing, whether human capital may always be there, but you need cash, you need money to be able to start a business. Now you have two options, that you save and then you use debt. And depending on which one you want to use, you must understand that they both have cost. You understand? The way I look at it from the studies that I've made, the way I look at it, I always know that debt is measured in monetary terms, while saving is measured in terms of time. So once you choose to save, you're going to utilize time. Once you use debt, that you want to use it to start your business, then you're going to utilize money. And they both have different consequences. However, this one is safer, this one is more risky, because once you lose money, there's a problem for you. Once you save, because you want to save in time to be able to get money, but depending on, like I said, depending on which one you want to use, it's up to you. But for me, I prefer to use debt to start a business. However, this one is quicker because you are already in the process. You are immediately in the process, but this one takes time, and we know that time is more valuable than money. So when we say time is more valuable than money, we're trying to say time is much more expensive, it's costlier than to use money, and that's how it is. If you're trying to build a business, for example, if you have a business, for example, and you want to utilize equity, is your money, or you want to utilize debt to invest, you know, they'll tell you that equity is costlier than debt because you're giving a piece of your life, you're giving a piece of your business away. So generally, you must know that saving money is costlier than utilizing debt. So, but if you're utilizing debt, you have to be very, very good. If not, utilizing this one can kill you. Debt can kill, as you hear the name, debt. So debt can kill you, and it can also, it's like a two-edged sword. You know, you can utilize it to smash or kill your enemy of poverty, or you can utilize it to hit yourself. So it's very, very risky to utilize debt, and I would advise 90% or 99% of you to go through this route. You get a job, you save some money, and then you get capital to invest in your business, because this one is safer. However, if you're utilizing this process, you must ensure that the money that you want to utilize to start a business, for example, let's say it's 100,000 naira to start a business, then you must at least, if you're trying to save, you have to save at least 500,000 naira to be able to cater for you, because you don't want to come save 100,000 naira and utilize, because if it matters, they're going to lose lots of time. So your first time might be lost because you've not got the experience yet. I talked about win rates and I talked about expected value in my previous video. Make sure you check it. I'll leave a link in the description to check it, and then you see how you can talk about how you can increase your expected value. But generally, you can utilize. If you want to save money, make sure you're saving at least 5 times of that money, so that if you lose the first time, you still have 400,000 to cater for yourself, or to try again in the business. So, and if you are saving 100,000 naira for a year, you have to spend 5 years in that job to be able to save 500,000 naira, which is lots of. That's what I mean by it. Measured in time, and time is costlier than money. So you want to save this money and come and God bless you that you don't lose this 500,000 naira. However, in debt, utilizing debt, you start immediately, and then you find a way to borrow 100,000 naira. Not bank, because no bank is going to give you money, because you are not credit worthy to borrow money from the bank. But maybe your friends can talk to your friends, can talk to your family, and then some other ways or things like that. And then you can generate the money. Or if you have any property, but we are saying we're starting from zero. So, but generally you can utilize this to start. However, you can lose the money the first time. And once you lose the money, you have to ensure that you have to go and find another money and things like that. You have to find another maybe 200,000. But because you already know that debt is something that's very risky, and then if you die, you can start again. You're not under any pressure. But with this one, you lose 100,000, and you know you're going to be under pressure. So you are forced to be creative. You are forced to be smart. You are forced to be intelligent about how to utilize debt, about how the business you are getting into going to operate. So you are forced to do all those things, and that is what's going to make you to even be more successful. And then one thing about utilized money is that you don't know what's going to happen to this money. This money can lose. You can lose all the money, and under that pressure, you can even die. You understand what I'm saying? However, if you talk about job, you don't know what's going to happen to your time. You don't know whether you have the time to even learn about the business. You don't know whether you have that time. And what stuff is that you don't know what's going to happen. If you save 500,000, or if you save 300,000, for example, something happens. That's what I mean by don't know what's going to happen in time. Something happens to the family member falls ill, the family member is kidnapped, and things like that. What you have to do is you have to spend this money, except you've locked it somewhere. You know that if your family member is dying or is something, you just have to find a way to get the money to utilize. So whichever way you want to utilize to get your capital to spend into business is good for you. But you must know, whichever way is up to you, but you must know that if you are utilizing savings, then we're going to start from something that is called a balance sheet. In a balance sheet, we have what we call assets and we have liabilities, and then we have owner's equity here. We have equity here, right? So if you're saving money to invest, or you're utilizing debt, you must know that both of these things, some people don't like to admit it, they believe that saving is just good or that debt is just good. But you must know that both things are liabilities. Savings or debt, they are both liabilities. Why? Because if you're saving for 5 years, you have what is called inflation, and if you're utilizing debt, you have what is called interest payments. That's why I said savings is measured in time, and this one is measured in money. And time is more valuable than money, so you want to save more time. You want to save your time and utilize money. If you're losing money, no problem. As long as you're learning the process, it's okay, and as long as you don't die under pressure. If you know you're not utilizing pressure, you're not going to be good under pressure. Make sure that you just get savings. However, if you're spending your time, that's something that's very simple. We only have 24 hours in a day, and our time is fixed, but our money, we can keep increasing our money. That's why I prefer to use it. That's why I told myself I don't want to waste my time going to get a job. And so many times business has crashed. I always felt like, let's go and get a job finally. But no matter how we run out, we just run back to say, now let's find a way to raise money. So you have to find a way to raise money, and there are different ways you can raise money through. If you raise money through the first time through people like me, I utilize friends and family the first time, I utilize microfinance the first time, then later I started utilizing demand credit, because our stuff is majorly based on demand. So we started using utilize demand or suppliers credit. So to start, so credit is something that is very, very interesting. It can kill you, but it's very, very interesting. Now, once you have these things, you know that both of these things are liabilities. Because when I say liability is something that takes money out of your pocket. Takes money out. I said brings money in. Brings money in. Liabilities take money out. What do I mean? Now, if you look at savings, when I talk about inflation means the money. So you saved 1 million naira last year, the last 2 years, you say 1 million naira over or 5 years ago, you must know that this 1 million naira is not the same as 1 million naira today. It has lost value. You understand that? It has lost value, so it has gone down. However, if you're utilizing interest payments, so that money at that time, this one is in future, this one is past based, this one is future. It was more in the past than now. This one it's more in the future than in the, it's more now than in the past when you took that debt. Understand? Because of interest payment, it's more, because why all these things happen is because of the time value of money. Because of the time value of money. Like I said, time is more valuable than money. So time costs more than money. So if you are going in terms of time into the future, you must know that this money is going to be worth less. So you want to balance all those things. So they are both liabilities. Now, once you have a liability, whether you saved your money and now you've gotten the money, or you're utilizing debt, next thing that you must know that this purpose of this liability, whatever you are saving for, that's what I have with problem with people that are saving. They are just saving for saving sake. They are saving because they want to buy a car, they are saving because they want to buy a house, they are saving because they want to buy something. Or they're taking debt because they want to buy something that's not sharp. Once you know that savings or debt, they are both liabilities, you must know that the first thing you must know about liabilities is that the purpose of a liability is to get an asset. Purpose of a liability. Purpose of a liability is to get an asset. Purpose of a liability is to get an asset. Purpose of a liability is to get an asset. Don't use a liability to buy another liability. What do I mean? You buy a car. The car is a liability, depending on how you use it though. But if you buy a car that you want to utilize for yourself, you want to use it to go to church, to flex and things like that. The car is a liability because you're going to be buying for, you're going to do maintenance on that car, so it's going to be taking money from you. So anything that's taking money from you is a liability. But if you have a car, for example, you're using it for boats, and the cost of you, the profit you're going to get from that boat, the revenue is going to come in more than the expenses. There's going to be an asset. But for now, you must know that if you're buying things that are liabilities, that are going to take money from your pocket again, this vacation, your babe and things like that, your babe can be an asset or a liability. Your babe or whatever thing like that, they're taking money from you, those are liabilities. You don't want to use savings or debt to buy another liability. You don't want to use savings or debt to buy a liability. You want to get assets. You want to use that debt to buy an asset. You want to use that savings to buy an asset. Now, what are some assets that we have? You have assets as number one, you have business. Start a business, which you talk about. The business is an asset because a business can be producing money for you. A business can also be a liability. You understand what I'm saying? So a business can also be a liability. It's taking money from you and draining you and draining you, and you're losing and losing and losing. That's a liability. However, you can utilize it as an asset. And apart from this, you have stocks, bonds, and all those things like that, paper, this thing. You have stocks, you invest in companies, those can also be assets. You have commodities. Like you buy metal, you buy gold, you buy silver, you buy all those things like that. Now we have digital commodities. You understand, people are buying digital products, features. Commodities also can involve farmlands and things like that. So those can be assets. Now I said most of the liabilities to buy is to get an asset. An asset, I mentioned things like business, stocks, commodities. You also have something like real estate. Real estate is also an asset because these things are things that will bring money to your pocket. They can bring money to your pocket. You have business, can bring money to your pocket in terms of profit. You have stocks, can bring money to your pocket in terms of dividends. You have commodities, can bring money to your profit, to your pocket. Or it can also be a store of value. For example, gold, you buy it today, or you buy Bitcoin, something like Bitcoin. Bitcoin is a volatile commodity. But imagine you bought Bitcoin last time, by this time, so it has brought more money to your pocket. You also have real estate, or real estate is also an asset. Now, once you have an asset, you want to make sure that these assets are producing an income. That's why we come to the income statement. And in the income statement, you have your income and you have your expenses. You have your income and you have your expenses. I want my assets to bring income to me. I want these assets to bring income to me. These assets are not bringing income to me. I want to get them. I want to classify them as under liabilities, which is not something that's profitable to me. Which is not something that I want. I want my assets to bring income to me. So how do you measure this? You say your cost of goods and everything like that. If you're doing business, for example, we're talking about business now. You use your business, and then after everything you have, after your income or revenue minus your expenses. Your income minus your expenses is going to give you, because you're using operating expenses. The income minus your operating expenses. The income minus your operating expenses is going to give you what we call your EBIT. Your EBITDA. Your EBITDA is your earnings before interest. That's your interest, your payments on debt, by utilizing debt. before taxes, because you pay taxes for depreciation and amortization. So you have your EBITDA. Now EBITDA is a very, very important formula in how the rich operate. So the rich operate, they say they're either going to save money to buy an asset, or they're going to utilize that quickly to get an asset, and this asset is going to produce an income for them. And then because of you've gotten an income, now you want to make more money, because you have, because of you getting these assets to make more money for yourself. Now if you get this income, what are you going to utilize it for? Now this income is going to, because these liabilities are producing cash. This liability is producing cash, which produces all these assets that now produce an income. Then from this income you subtract expenses you're going to get. Why? Because the rich people are not focusing on cash. You can see, if I talked about assets and liabilities. I didn't say a liability take money from your pocket. I didn't say an asset bring money to your pocket once, because it's a continuous stuff. So the rich does not focus on cash. I don't want to get a job because of just cash. You don't want just cash for yourself. You want cash flow. And for you to get cash flow, once you get that income, once you get that money from your business, or from whatever thing that you're doing, stocks, real estate, commodity, you want to ensure that you get cash flow. And what does that mean? That you're going to have an expense. You're going to utilize expenses that is now going to produce an EBITDA. Then from this EBITDA, now we have our cash flow statement. And that's why I say we have three very important financial statements that everybody has and everybody must understand. Some people don't know that they have financial statement and they are not just looking at it. Whether you're looking at it or you're not looking at it, you have it. So you have the balance sheet, you have the income statement, income expense statement, profit and loss statement, and you have your cash flow statement. Now in this cash flow statement, you have the cash flow from the operating, cash flow from operating expenses, you have cash flow from operating activities, you have from operating activities, you have cash flow from investment activities, and then you have cash flow from financing activities. Financing activities. What does this mean? That means that this cash flow, what I'm operating, this EBITDA. The money that I get from here, let's say I get 200,000 naira from here, I'm going to put it here in terms of profit, not revenue. I had an income of 1 million, and I spent 800,000. My EBITDA, my operating profit is 200,000 naira. Now, out of this, now we have some investment things that we've done. Investment in terms of I borrowed money to somebody who's going to give me interest, or somebody borrowed me money, I'm going to pay them interest, or I'm going to pay dividends and all those things like that. Whatever thing about investment, getting dividend or paying dividend, I'm going to get it. I must make sure that my own investment outside is more than people's investment in me. Because I want to get net dividend. I want to get a positive dividend, not I'm paying people dividend and nobody's paying me. I also want to ensure that people are paying me interest, not that I'm paying people interest. So that's what the rich are thinking about. Because they want cash flow, they want to increase the amount of money that they have. So they borrow money from people, yes, but they also borrow other people money. And this one also paying them interest. So this person is borrowing me. That's what the bank does. The bank borrows money from you. When you put your money in the bank, you borrow the bank. You deposit 200 naira in the bank. That means automatically you borrow the bank. Some people don't know about this. You borrow the bank 200 naira, and the bank takes this 200 naira because they're going to pay interest on this 200 naira. Maybe it's 1%, and that 1% is something like they're going to pay $2, two naira or $2 per month. Which is not even possible. Maybe that one is going to be per year. They don't pay $2. However, they take this 200 and they borrow this 200 naira to a business person, somebody who has what they want. They borrow the person 200 naira because the person is going to pay them not 1%, but like something like 10% or 20%. Now the interest rate in Nigeria is about 27%, but they are paying the person like 20. So you can see the difference. I borrowed 200 naira from someone. The person is paying me I'm paying the person $2 or 2 naira. But this person, I borrowed that money to somebody else who's going to pay me 20. So I'm going to pay this person $2 from this 20, and I'm going to keep a profit of $18 or naira. So you can see how the rich operate. The rich, they're not thinking about all these things. I'm taking a debt. They're thinking about how can I get cash flow. So once they've taken investment from people, they've taken loans from people, they want to make sure that once they invest it in all these places, this one, they borrowed it for their business at a rate of 2%. But then they're going to make a profit of 20%. That's how they think about it. So for example, after everything, the plus and minus what they are borrowing and what they are owing, this $18, they now get something like 10,000 dollars. For example, I'm giving an instance. When you have financing activities, you bought some equipment, you also want to improve your processes in your workplace, you bought some machines and things like that because you want to improve your processes. And then you also sold some things. This one is going to be very difficult for you to even make a profit because you're selling some things. And some people can still sell it at a profit, you understand? So they bought some equipment, they utilized it, and then they sold it off, or they packaged it and they packaged and optimized that financing activity, and then they made it. That's how real estate work. You buy a property, then you upgrade it, you work on it, and then you sell it. That's called flipping. And they flip those properties or those equipment and things like that, and then they make more money. Let's say they bought a warehouse. For then once they've used the warehouse and things like that, the warehouse is now doing very well. They now work on the warehouse, do some paintings, work on it, the environment, and then they sell it at a higher amount. So let's say they keep, because it's very, very hard, some people can keep $2,000 on top of their money. So after everything, they want to get a positive cash flow of $212,000. Now once they get this money, they will invest it to get another asset. Then they get commodities, real estate, or they start another business. That is how the rich people operate. They borrow money or they save money. They get that money into liabilities. This money that they bring is a liability. They use it to get an asset, and that asset is going to give them cash flow, which will make them together. From that cash flow, they will invest it into the asset or another asset, and it's going through like that. It's going through like that. That's like they keep getting cash flow until the point where they don't need to work. The machine is just working by itself. Now, whether they are there or they are not there, inside the business, they have workers and things like that. They have stocks. They don't need to work in the company. They have stocks in. They buy in Apple, in Tesla, and those things are working for them. They bought commodities like farm and different things, and those things they have people who are working for them. They bought animals like cows, and cow is just producing for them. They have real estate. The tenants are paying the money for them. They can retire. They have no need to work, except they just want to continue working. This is how the rich people operate, and this is how you must operate. If you don't know about financial statements, you cannot make it. You cannot be rich. Forget about it. You cannot be rich. Forget about it. If you don't understand time value of money, you cannot be rich. If you don't understand savings or debt, you cannot be rich. If you don't understand inflation and interest, forget about it. You cannot be rich. If you don't understand assets and liabilities, you cannot be rich. If you don't understand income statements, you cannot be rich. It's profitable. It's possible for you to be making money in terms of your EBITDA. It's possible for you to be profitable in your operating expense, operating activity. You have to audit there. But your investments, you have too much debt. You have too much debt and you're paying too much interest. Like what happened to me? Sometimes I'm profitable in my operating activities when we are good on a good month, but we have very high interest payment that we're paying every week and every month. And so here we're having something like, for example, $400,000 or $400,000. That's what you're paying. This is already a loss. So you can be profitable from your business, but because you have interest payment, you have debts to pay, or because you sold your machines or your equipment or your property at a loss, you now have a loss. For example, you have a negative cash flow, and it's possible to have a loss. You are losing in your business. For example, you're losing in your business, however, because you've lost in this operating, but because of your investments outside, you're still profitable. Those are things I think about as a business person. All these things I've discussed like this, I'm working on myself trying to get it. It's very hard. Just like you understand how a bicycle works or a car, how they will explain to you how you can drive a car properly. So you really understand what they are saying. That's theory. Now to apply it to practical is very, very hard. You just don't get it like that. You don't just come the first time and get it. You're going to get punched in the face. You're going to lose money. You're going to get into debt. You're going to handle pressure and things like that. However, what you want to get is that I must get this stuff working for me. I must find a way to start getting positive cash flow in everything that I'm doing. I want to get positive cash flow, and I want to retire early. So whichever thing you understand, make sure that you follow me for more videos about how you can succeed in business, whether you're doing a comeback from your failed business or you're just starting a business. Make sure that you follow me for more. I'm starting my businesses, and my focus right now is on agriculture. But that doesn't mean agriculture is not anything, just about you understanding the process. And once you understand the process, you can get into any business, you can get into any stocks, you can get into any commodities, you can get into any real estate, as long as you understand that. What is your cash flow at the end of this? Are you profitable or you are not profitable before I invest? Is this business profitable? What is the model? What is the money model around this business? Is it profitable in the long run? Can I be able to run through the reducing the expenses to be able to get more income, more EBITDA, more profit from that business? Those are things that rich people think about. And make sure you subscribe to this channel to see more videos. Don't forget to like the video and share it as much people because we want to reduce the amount of poverty out there. And make sure you turn on the notification bell and leave a comment below on how you're going to get started in your business, and I wish you success.